Turning now to moves in currency, and specifically the Japanese yen. The yen has been sliding against the U.S. dollar for years now, touching a more than three-decade low on Monday when it fell to 160 against the U.S. dollar. That was in morning trade in Asia. But around lunchtime, the yen jumped on rumors that for the first time in 2 years, officials were stepping in to bolster the falling currency. In late trading Wednesday, the yen made even more of a comeback as investors continue to look for signs of intervention by Japan's central bank. A lot going on here. For a closer look at this wild swing of the yen, we're joined by Amir Kermani. He is an associate professor of finance and real estate at the Haas School of Business at UC Berkeley. Welcome to the program. Thanks very much, Amir. We appreciate you taking time.
Thank you for having me.
Walk us through what's going on and why this is happening, why it has been happening for such a long time with the yen, and this news that perhaps Japan's government is stepping in to try to control this was certainly appreciated by investors. What do you make of that?
So I think if we want to understand the movements of Japanese yen over the last few years, it's very important to first look at the fundamentals of the economics. And in particular, we should remind ourselves that Japan has been running a huge deficit over the last few years. And so the first question that we should ask ourselves is that why is it the case that Japan has been running deficit for the last few years? And when we look into that question, the first factor that basically pops up is just the energy prices. So we should always remind ourselves that Japan relies more than 88% of the energy that basically Japan is using is relying on the fossil fuel that it's importing from the rest of the world. More than 60% of that is oil and gas. And especially since the Ukraine war, there has been a very significant increase in the price of the oil and gas, and that affected Japan a lot. The second factor that was very important is also China economic growth. But the fact that there has been some slowdown of the economic growth of China has reduced also the amount of export that Japan had to China. So if we compare, for example, numbers compared to what we had, for example, 3 years ago, like the Japan export to US and Europe has recovered almost entirely, whereas for China, it's about 20% less than what it used to be like on a relative basis 3 years ago. And the third factor is tourism. We should all, again, remember that tourism accounted for about 5% of export of Japan before the pandemic, and the pandemic hit the tourism sector a lot. The good news is that the tourism is recovering very fast. So the year-over-year growth of tourism was about 70% in the last year. So the tourism sector is going to be one of the driving force. The export to China is also growing relatively fast, and perhaps partly thanks to the depreciation of the Japanese yen.
Okay, so let's kind of break those down, why they are important. Because if the yen is losing ground to the dollar, the materials, the products that Japan is selling, that it's exporting, they're going to make more money on it. But as you mentioned, bringing 88% of what they need for fossil fuels, that's going to cost them a lot more money as well. And tourism, clearly, if the yen is down to the dollar, it makes it a very attractive tourist destination. So now that COVID is moving away, it certainly seems like it's going to be certainly help Japan in the near future.
Exactly. So I think the predictions for the future is not that bad. I think I feel like actually some of this depreciation of the Japanese yen was very good for the Japan economy. Japan economy really needed to find back basically its location as a global leader in exports. So it's making all of these Japanese goods more attractive, and tourism is going to grow even faster than what could have happened otherwise.
Why do you think the Bank of Japan has not intervened until now?
So I think the Bank of Japan always have to make a decision between how much of the depreciation of the Japanese yen is good for its economy versus the volatility in the market that is just because of the market dislocation. So as a central banker, you should always distinguish between movements in your exchange rate that is related to the fundamentals versus the movements in your exchange rate that is more related to temporary factors and more like the investor sentiments. And as a central banker, that's one of the hardest things, that you are always in this game of finding out what is a fundamental factor and what is a sentiment factor. And it looks like actually they thought that the movement that happened last week, or a few days ago, it was mostly related to that speculative attack. So they intervened, according to some Goldman Sachs estimates, it's about more in the north of $30 billion intervention that they did to the market. And of course, market always love that. Whenever you take out some volatility, some excess volatility from exchange rate, the investors in that market, they feel more comfortable investing in that
Amir,
currency.
Do you think this is going to make Japan rethink the way it does some things? Perhaps its import-to-export quota, and also its dependence on fossil fuels?
So the project of reduction of reliance on fossil fuel is a very long-term project. In any case, they have been working on it. Like, you know, that in 2014 they restarted using these nuclear plants. So they are very well aware of that long-term problem that they have. The other long-term problem that they have, and they really need to address that problem, is aging. So we should not forget that Japan is Japan and South Korea are the countries with this aging being the most important issues for them.
Yeah, indeed.
And honestly, the only solution to that is better migration policies, more targeted migration policies, making Japan a more attractive place, especially for highly talented people. So these are the two long-term problems that they have, and they have to work on it over the long term. But I think in the short term, this depreciation of the Japanese yen at the time that their inflation is not that high, so the central bank doesn't feel that they have to do massive interventions. And at the time that their growth is not that high, so they don't feel that they really want to increase the interest rate to combat that depreciation of the Japanese yen. I think in the short term,
indeed, both inflation and the interest rates both extremely low right now. Amir Kermani, we certainly appreciate your time, and we look forward to chatting with you down the road on this issue as well. Thank you again.